Well, cheers. We've got a positive day today. One of the positives, I've already drank a couple sips already, but man, I had the coffee right up against the lip, like the perfect pour. You know, you want to have as much coffee as you possibly can. You obviously don't want it to fall as you're walking around or spill out of the cup, but just a perfect cup today. We got, I wouldn't say it's a perfect inflation report because we're still a ways off of where we need to be, but we got finally that trend that we're looking for. All year we've been waiting on a couple of months of inflation data moving in the right direction. We got a couple head fakes earlier in the year, once in the spring, once in the summer, but finally now we took the October numbers and put another good positive number together in November. Those numbers were out this morning. Inflation on a headline basis came in more than expected. It came in more than expected on the core basis. A lot of the underlying things came in. The sticky parts, shelter was still very sticky, but the Fed's already acknowledged that measurement, the way they look at things, is a lagging indicator, and it will likely take several more months for it to start coming off. But it's already kind of baked into a future forecast. So that part's not even, you can almost discount what the shelter component was this time. And then you got food that's still kind of sticky. So that would still probably, I would say your one outlier was just food costs up like 0.5% on the month. So what does this mean for the Fed? Right? If we see inflation coming off, what can the Fed do? Well, the Fed was basically going to go 50 basis points tomorrow. I think that's now completely baked in the cake. They're definitely going to go 50 tomorrow. There's nothing here that would make them want to go a 75 basis point hike. Otherwise, they would have already indicated that prior. So the question really tomorrow is going to be, what does the Fed say the path forward is in 2023? They're going to issue a dot plot, which they do once a quarter, and it's going to say where the members think that interest rates will be over the next year. And I think that's really what you want to look at to see whether that's come in at all, because most people think that the Fed is kind of towards the end of this hiking cycle. They're going to do this 50 this week, and then maybe they do one more 50, or they do a couple of 25s early next year. And then there was an expectation that they may have to start cutting rates simply because all of the pressure that these rate hikes put on the economy will finally start to bleed through, and it will start hurting the economy. It will start hurting corporate earnings, and they'll be forced to start cutting rates. That's going to be probably the big driver going into 2023 is will the Fed, when will they start cutting rates? How long will they keep them elevated? And how long will it take to really start seeing the economic damage from all the rate hikes they've already put on? So plenty to digest, but we have ourselves a good piece of data today that is showing that, yes, we have the start of a trend with inflation coming down. And so it's still over 7%, still far too high. They're trying to get to 2%, but we are making progress finally in the right direction. If you like this content, please subscribe. Obviously, we'll be on WYFF News 4 tomorrow. Mike on the Money on WYFF News 4 every Wednesday in the 4:30 newscast. You can stream it around the world on WYFF4.com. We'll be talking about the Fed, CPI, all of it.